One of the biggest crackdowns on a foreign player, market regulator SEBI has barred the US-based trading giant Jane Street from the Indian markets. More than that, they have said that they are going to take control of the 4,800 crores of profits that Jane Street has made at the very least, or the money in their accounts. Sajith Manga joining us for more details. Sajith, let's start with why this is such an important crackdown.
That's right. The entire genesis of this crackdown came in April 2024 when there was a report published based on court documents that Jane Street, US-based quantitative trading firm, made over $1 billion in trading in Indian options market, and that set the ball rolling with respect to investigations done by the SEBI, and then in a national stock exchange, where a maximum amount of F&O trading that happens there. As per the investigation report which was found, it basically said that the probe found that there was unfair trade practices which were undertaken by Jane Street, and as a result of which they made a quantum amount of profits in the options market, especially in the F&O market, because they were more of a high frequency trader and algo trader in that sense. So what exactly has happened? Jane Street made nearly or more than 43,000 odd crores in trading in options market, especially index option, with Bank Nifty alone accounting for over 40% of that profit. So nearly 17,000 crores of profit came in from trading in Bank Nifty. There were multiple strategies which were undertaken by Jane Street as part of this trading pattern. And if you look at the net amount which they earned, it was more than 36,000 crores between Jan 1st, 2023 and March 31st, 2025 there. SEBI has passed an interim order pending final order and investigations, and as a result of that, there would be the regulator has impounded 4,843 crores of unlawful gains made in the Indian market, and all the entities of Jane Street which are trading in the market through a delta strategy have been barred from participating in the Indian securities market. Now, we've been talking to some of the market regulators here, and they've been saying that the impact of Jane Street will be very limited in the market, especially because there have been some trading restrictions with respect to delta trading which came into force from July 1st, as a result of which position limits have been curbed, and so large positions can no longer be taken in this market, and that maintains the stability and some kind of
Sajid, here's the thing. I mean, so now we have the numbers, right? And the numbers are staggering. Now, past instances of whatever has happened, right? What could the implications of this be? Because this certainly is singling out high frequency trading as one key reason. It is not the only reason where people profit here, right? Does this, to your mind, and the question to you, Alex, Tamanna, let's just discuss this out. Does this have the possibility of souring the minds of foreign investors? Or as Tamanna said, that this is a different kind of an investor or a trader relative to some of the other long-only FIs, because it's been booked in the US as well for other things.
So, let me put it this way, from a regulator's point of view, regulator is not against making profits in the derivative market, and that they made it amply clear in the last board meeting and the press conference that happened, that we are not against profits. It's about the trading patterns and here. So what has happened here is, I'll just give you a strategy which they used, Neeraj, to give you an indication how the market was manipulated. There's one strategy where they would go in the morning and sell aggressively large amounts of Nifty, Bank Nifty under constituents, which is in the cash market and in the futures, and then they will at the same time sell Bank Nifty via index options. Towards the afternoon, they will reverse the trade, and at the peak position when the shorts are very high on Bank Nifty, and that on an expiry day, they will make profits because the index would have come down because they've shorted the index in that sense. So what the regulator is trying to say here is that your volumes are creating or manipulating the index and index constituent, as a result of which the the position you're trying to take the index to a level where your positions will become profitable, and as a result of which, when retail investors are getting into index options, where we've seen a lot of retail investors getting into index options because of the kind of leverage they can take there, they end up in losses. And it's all done manipulating the volumes and the shorts, because you're playing the cash market, the futures market, and the F&O and the options market, and you're taking the index to an expiry level, which gives you profits at the end of the day. So that's something which they're against it, and that's why they've impounded for 4,800 crores.
Sajid, the question is, of course, this has to do with Jane Street very clearly, and you've stipulated how the use of trading of the underlying security in the index and various option strategies have been misused. So it's not for the purposes of anything else, it was the purposes of creating a certain level on the index, which is where the problem arises. The question is, do any other players in this time frame of 2021 to 2025, will other players also have to worry about similar strategies that they've undertaken, is the question.
This strategy,
I don't think it's possible to answer this, to be honest.
I mean,
I don't think it's
if I
possible
try to answer
this.
that question, in the sense that they had 15 to 20% of the volumes at that point in time, and that's why they were influencing it.
Exactly. So and which is why. So because there are a clutch of other high-frequency traders who are doing this. In Jane Street's case, because this was discovered and it's such an unusually large set of profits made, and which is why this order comes into importance. The only question that we have to try and figure out, one, that whether legally, and Jane Street has, I think, given a release at 8 a.m. that they believe they are in, they have not circumvented the law or whatever, etc., and they would work in conjunction with the Indian regulator to try and figure out how they can resolve this. But this is going to get ugly before it gets better.
No, so here's what they say. Jane Street disputes the findings of the SEBI interim order and will further engage with the regulator. Jane Street is committed to operating in compliance with all regulations in the regions we operate around the world. But let me go across and just get views on how market participants see this. K. Suresh is joining in. He is president at ANMI. Mr. Suresh, very good morning to you. Now, Jane Street, I think, is the worst kept secret in Indian markets right now, and the kind of manipulation which has been happening. But what do you see as the impact today of what SEBI has said?
No, this is the most unfortunate thing which happened. But as what I can say that as far as our system is concerned, all types of safeguards are there. I mean, the impact of that may not be that far as far as our market is concerned. Actually, it is an offshore issue which we need not worry about that much.
I'm surprised that you're saying this, right? Because this will have an impact on volumes for sure, at the very least.
No, actually, see, what I want to tell you is that it is what's called a sensational issue. I'm not denying that, but it's not going to have that type of impact what we visualize. There will be some moderate thinking on that, but it will be settled at the earliest.
I think one of the major impact, Mr. Suresh, has already taken place, right? SEBI had to step in with tightening norms to push retail investors out of derivatives market because of the impact Jane Street was having. So that impact has already come in.
No, Madam, SEBI is not pushing retail investors out
No,
of
I've said SEBI's tightened norms, which then made it difficult for retail investors to come in.
No, it's not difficult, Madam. See, the idea is that you know very well SEBI has pronounced, or their data also pronounced, that almost 90% of the people losing money in the market. Okay, that is the major issue, concern for the SEBI. In order to address that issue, only a lot of measures have been taken. So we can't say that this is bad for the people or something like that. Only thing is, it denotes that the people who want to play in the future and options, they have to be matured enough, they should have knowledge, and then they can enter the market. Nothing wrong in that, So that's what the restrictions, lot size is increased.
Sure.
And so many scripts are removed. Everything has been done because keeping in mind that matured people should be in the market.
Agreed. But the fact is that it should be a level playing field, and that's what we're talking about today. Thank you so much, Mr. K. Suresh, for speaking with us.